makers and market movers. This is The Pulse with Francine Lacqua.
Friday the 7th, good morning. Welcome to The Pulse. I'm Guy Johnson in London. Francine is out today. But let me tell you what's coming up on today's programme. European stocks and Wall Street futures steady. I think that's the polite term. Markets basically awaiting 7:30 Eastern time. US jobs data expected to show that the US labour market is slowing. We'll keep an eye on that data as we work our way through the day. ECB officials, let's turn back to that, cautioning this morning on any rush for more cuts. This after, of course, we saw yesterday the Governing Council delivering on its promise to lower rates. That feels increasingly isolated, doesn't it, that rate cut? Plus, President Zelenskiy is set shortly to address the French National Assembly. This after we saw yesterday Emmanuel Macron promising Ukraine more military support, including Mirage 2000s. Let's talk about what is happening with the European market story this morning. Don't get excited about this. Nothing is happening. We are waiting 7:30 Eastern. That's 1:30 UK time, PM, 2:30 CET. That's when the US data is going to drop. That's what we're waiting for. So European equity markets are doing nada this morning. We're going to wait for that data. That's the next big catalyst after we saw the ECB yesterday. Let's run you through the data elsewhere and show you what is happening. US futures doing nothing. Ignore that. The yield is going to be important today. That is going to be potentially where we're going to see some of the biggest price action. Not on the 10-year, maybe at the front end is where we're going to see some action today. The market's expecting the survey's 180. The whisper number's 166. Maybe the market is set up for an upside surprise. So maybe we see yields going higher. Euro dollar unchanged, which is interesting given the comments we've been getting through from the ECB Governing Council members this morning. Crude doing absolutely nothing either. Basically, we are waiting to see exactly what is going to happen with this payroll story. So that's the catalyst today. The catalyst yesterday was definitely what we got out of Christine Lagarde. So we've been committed, the ECB's been committed to a rate cut in June for absolutely ages. We delivered that yesterday. But now Christine Lagarde has decided she's going to put a poker face on. She's not going to tell us what comes next. When does the next rate cut come? She was definitely not delivering on that as a pitch yesterday. She's not going to tell us anything. We are data dependent. Let's take a listen to what she had to say.
We are not pre-committing to a particular rate path. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decision will be based on our assessment of the inflation outlook in light of the incoming economic and financial data.
It's 8:30 Eastern. That's when the jobs data is coming through. I've been saying that all morning. Somebody would have corrected me a little bit earlier on, you would have thought. Anyway, let's talk about what we got from Christine Lagarde. Let's talk about what we've got this morning from a whole series of ECB speakers telling us that we are not committing. And actually, the Irish Central Bank governor going even further, talking about the fact we're not in a rush. Maybe we're not in a rush to cut at all. Let's go back to Frankfurt. Lizzie Burden is standing by. Let's talk about what happens next, Lizzie. Governing Council member after Governing Council member this morning saying very clearly we are not pre-committing here. We are data dependent.
You're absolutely right, Guy. It's been an about-face from Christine Lagarde. She'd been telegraphing that June cut since we spoke to her in Davos in January. So it felt yesterday that there was no choice but to cut. Otherwise, it would have been a huge surprise in the market. And yet they cut while, of course, raising the inflation forecast for this year and next, which, frankly, and I think I speak for the market here, felt weird. You saw the euro rising off the back of it. And this is a central bank that already faces questions around its credibility. You only had Austria's Holzmann feeling like he could dissent because of that recent economic data, the sticky inflation, the rapid wage growth. SocGen actually saying that this decision was data independent. So in terms of the path ahead, we've had a raft of ECB speakers this morning. You point to Maklouf saying he doesn't know how fast the ECB will carry on, if at all. Muller saying the ECB shouldn't rush into another cut. Nagel saying that the ECB shouldn't be on autopilot. And Kazakhs saying that the ECB needs to cut gradually and dependent on the data. Guy, it leaves a sense of confusion here. Traders thought you were going to have 2 cuts this year. Now they only see 1. July seems off the table. A question mark over September now. And the more meetings this goes on, the more yesterday looks like a policy error.
Lizzie, great stuff. Thank you very much indeed. It's interesting, isn't it? the rowing back that we're seeing, maybe even a sort of tougher line being put on this story by some of the Governing Council members this morning. Lizzie Burden in Frankfurt, great work over the last 24 hours. Salman Ahmed's global head of macro and strategic asset allocation at Fidelity International, standing next to me. We pre-committed to the June cuts. We got that cut, but now the poker face is on. The ECB doesn't want to tell us what comes next. Have we ended up having a cut and then this kind of hawkish narrative it appears developing? What does that tell us about the indecision, the uncertainty that exists now on the Governing Council?
Sure. I think I'm going to call the elephant in the room. It's the Fed. Basically, I think the ECB got into that pre-commitment mania when the Fed pivoted late last year. And, of course, the Fed U-turned after that because, obviously, the data in the U.S. economy was much stronger and the flow of inflation data, especially the stickiness, became much more clearer. But, of course, as the telegraphed cut came through, now they find themselves in a position that what if the Fed doesn't cut at all? And then they are exposed. So I think they are trying to maintain and retain some optionality as we go towards the deeper end of the year, because I think they can also pivot go back to the cutting if the Fed has a clear path of it.
The Irish Central Bank Governor is out with a line this morning, if at all. So we don't know when the next cut's going to come, if at all. What do I make of the if at all? How much of a danger is there that yesterday's cut was a kind of almost one and done? And what would that do to the credibility of the ECB, do you think?
So the credibility, I think, ultimately comes through from how the inflation pathway comes from here. So the good thing is that they have acknowledged that inflation is stickier. So you see now inflation not going below 2% by 2026. I think that helps them. But this one-off, with the benefit of hindsight, if they are not able to cut again, will look, a policy error, no doubt about it. But if you zoom out, what kind of world we are in, which is now high for longer and longer. And I think they are trying to acknowledge that because inflation is sticky and there's a growth rebound going on in Europe at the moment.
In terms of, therefore, when we think the next cut comes, what is your current thought process?
So we are in the view that Fed is unable to cut this year, not because they don't want to. I think they do want to, and I think structurally they are more dovish.
Powell's told us he wants to.
Yeah, he wants to. And it's very clear. There's no, you don't have to guess too much about that. But the data, we think, will not allow them to create that narrative to start the cutting cycle. And that has implications on the ECB. We think they would also like to cut once more, but the Fed window will not allow them. So it's interconnected, even though a lot of commentary we have seen so far is very unconditional focus on Europe. But US and Fed policy matters.
If we don't get significant rate cuts, is there a danger that the economic trajectory we are on at the moment, at some point policy is going to have an impact? Are we in the kind of no landing, hard landing scenario? The longer we leave rates on hold, particularly here in Europe, where the economy feels more vulnerable than we're seeing over in the United States, does that mean that ultimately, when a recession arrives, it's going to be more brutal than it potentially should have been if the ECB had taken a completely independent view of the world?
So no doubt that the tails are increasing. So, as you rightly pointed out, we are increasing this risk of a transition from hard landing to no landing to hard landing and basically completely forgetting about soft landing. The critical factor of that will be the refinancing flows. Refinancing is going to pick up next year. That's when the effective interest rates will go up. A lot of the corporates refinance for longer terms during pandemic, so they have not been hit by those higher rates yet. But it is starting to happen. And that's why 25, because of the politics as well, fiscal policy dynamics, is going to be a very critical year. And that's, I think, where we can get a lot of things wrong rather than 24 or 2024 itself.
Why are we struggling to figure out what is happening? The central banks are really struggling. Markets are really struggling. We are whipping around. This week, we've seen a huge rally for bond markets. Yields have come down really sharply. And I feel like I've watched this movie, and we're only halfway through the year, 6 or 7 times. Why are we struggling so much? And when do you think clarity re-emerges in terms of our understanding of what is happening with the economy? Are we still in the post-pandemic kind of hangover phase, and that's what's causing the problem with the models?
Certainly. I think the post-pandemic phase is still there, even though people have forgotten about it because it was a painful, traumatic period. But the supply-side shocks were very severe, and that has, I think, contaminated a lot of the analysis, a lot of projections by key central banks. And the markets have gone into narrative wars. I think they are less focused on fundamentals evolution. They are more interested in narratives shaping market pricing, and that's why those faster cycles we are seeing. But I don't see that changing anytime soon.
Volodymyr Zelenskiy's just got on his feet in the French Assembly. He's going to be talking about how the war is evolving. Don't worry, I'm going somewhere with this. And the reason I'm asking this question is that what he's asking for is basically financial support. But this goes to a wider question in Europe, which is we need to rearm.
Yes.
We need to spend huge amounts of money on rearmament at the same time that we are dealing with the green transition, as we're dealing with an aging population which requires huge amounts of money on social security. Europe needs to spend an awful lot of money. To what extent is that priced into the current bond market setup? And even if we do get rate cuts, the long-end yields kind of stay where they are because of the magnitude of what we're seeing in the geopolitics and elsewhere.
Yes, certainly. I think that is probably the most important legacy of the pandemic and the wars, I think, built onto that, which is that there is a lot of demand on governments to spend money. We've seen that in the US. We've seen that in Europe, although one can argue there is more scope for fiscal stimulus, especially for countries like Germany, because the debt to GDP ratio are much lower. But it also means that they need more cohesion between the different countries, which has been, during the pandemic, that was probably the most strongest sign that, the system remained intact. So, yes, there is demand for capex, government capex going forward, and we think that the curves will have to be steepened. And the natural shape of the curve is quite upward sloping compared to what we are seeing right now.
That's a big shift from where we are.
It's a big shift from where we are.
Salman, great to see you. Thanks for stopping by to see us. We really appreciate it. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation, joining us from Fidelity International. As I say, Zelenskiy is currently speaking to the French National Assembly. This after yesterday, we saw the French President Emmanuel Macron promising barrages, fighter jets and training. This ongoing spending on military rearmament and the defence of Ukraine is a story that we need to think about. Up next, we are going to be talking about what is happening in the tech space. We will do that next. This is Bloomberg.
We're saying to ourselves, wait a minute, if Nvidia is going to keep running like this, the only reason it should deserve to do that is if it's going to benefit a lot of other companies. And we began to look at what those other companies might be.
That's, of course, Cathie Woods of ARK Investment Management, talking about the concentration risk around Nvidia and the big tech stocks and the kind of the cycle that we see existing. It was interesting, I was talking to a guest a little bit earlier on, talking about the idea that it's just a completely separate universe to the kind of the macro story that we're seeing elsewhere that's affecting broader markets. Let's talk about what is happening with the market picture and how capital markets in particular are evolving this year. Feels like a very different year, doesn't it, than we've seen over the last couple of years. Philip Drury, Global Head of Technology and Communications Investment Banking at Citigroup, standing next to me. Morning.
Great to be here.
Look, I'm good. And I imagine you're pretty good as well. We've come off some pretty bad years, and it finally feels like the capital market story is beginning to evolve into something a little bit stronger. But my question is this, do the green shoots that we're seeing evolving in the United States starting to poke their noses through the soil over here in Europe? Yeah. Is that something that can be sustained?
Well, look, it's definitely been a much better first 5 months of 2024. So 22, 23 were difficult years coming off the heels of a record 2021.
Yep.
If we go through the products, debt financing has been very, very robust, right? There's a lot of talk on Bloomberg this morning around how many rate cuts are there going to be. At the end of the day, if you look long-term historical trailing, the 10-year at 430, it's a reasonable level, frankly, in historical...
Market can live with that.
They can, in historical context. And what's important is spreads are pretty compressed, very competitive debt financing market at the moment for
A little compressed, they're very compressed.
Yeah, for sure. I mean, we have 8.2 on our high yield index. That's about, 360 bips over in terms of spreads over the Treasury, so reasonable levels. When we go to equity capital markets, we've started to see some IPOs in the US, and they've traded pretty well, so investors are seeing positive returns. In M&A, we've also seen green shoots. We've seen strategic bids come back to market. So that's been through synergies of combinations. They've been able to navigate higher financing that we've seen relative to the near term. We've seen 18 take privates greater than $1 billion. and we're starting to see private equity enter formal processes. That's a sign of greater confidence. Before, we were seeing more informal bilateral conversations, so there wouldn't be any taint if those deals didn't go through. Now we're seeing formal processes. Now, just on that point of, is that coming towards EMEA in the UK? It's earlier.
Yeah.
But
How much earlier?
But we're starting to see it happen. I mean, look, Citi led the $14 billion of placement of London Stock Exchange on behalf of Thomson Reuters, Blackstone and the consortium. So follow-on offerings are getting priced in the region. Convertible bonds are getting priced. We led the $5 billion Alibaba convertible. This will all be a precursor to the opening of the IPO market. And obviously, Aramco will price probably during the course of this morning, and that's a very, very sizable transaction.
Yeah, that feels like it's in a slightly different universe to maybe some of the other stuff that we're talking about.
Sure.
My takeaway from Super Return in Berlin this week, though, was that private equity wants to offload, and it can probably do so with its really good companies. The cream of the cream, they could probably exit. The rest of the portfolio is going to be a much bigger struggle. So are we going to see a kind of stop-start story here where we get a few coming to market, the good stuff comes to market, but then we've got to figure out what happens to the rest of the portfolio? How much strength is there? Does it go beyond, when it comes to IPOs, you think, the kind of the top end of what portfolios have in them? How easy would it be to offload some of the other stuff?
There's a big focus on DPI, right? You hear a lot about it. So what's the ratio, distributions versus paid-in capital? So the pressure is certainly mounting. But private equity has options, right? You've got a very competitive debt financing market we've talked about. So you've got bank credit, you've got also the private credit as well. Sell-side M&A believe will pick up, and the strategic bid that's coming into the market is meaningful. And as the IPOs start to come, I think you'll get some very, very strong companies, growth plus profitability coming first to the market, and then we'll reach out. But look, I think you have depth of capital markets, you've got a decent financing market. So I think there are private options for private equity and also public options, and that's a reasonable competitive universe that they have. They don't just have one avenue that they need to pursue.
Talk about the M&A story. What do you? Give me a few months ago, somebody said to me, "I'm seeing loads of deals." And you've seen some of those show up in the UK. There was a lot of activity that's starting to come through now. Just give me a sense of the kind of the tone of the conversation that we're seeing now. Is it continuing? Do you hear about the potential of more deals still to come? What is going on? What does the pipeline look like?
The pipeline's robust. The conversations are increasing. I think what's really interesting is the strategic bid that we're seeing. Artificial intelligence is driving a lot of that.
Yep.
Corporates today around the world are re-looking at their business plans and thinking, how does AI transform my company? And that is impacting their M&A decisions. So an example, Citi advised IBM on the acquisition of HashiCorp. That is an example. You saw the last couple of weeks Palo Alto Networks announcing their combination with IBM. You saw Microsoft's investment in the London Stock Exchange. We've seen OpenAI now, not just with Microsoft, but also announcing with Apple. So you're seeing these joint ventures. I was at the Data Cloud conference Monday and Tuesday this week in Cannes. The amount of conversation around data centers driven by AI, the amount of funding that will need to take place over the next 5 to 10 years is transformational. So AI is really going to drive M&A and transformation. And look, we've seen a weakness in software recently.
I was going to ask you about this.
Yeah, partly because of the distraction of enterprise spend around AI and data. Now, I believe, and we believe, that software will be a long-term winner, but they need to develop the AI incumbent capabilities before deployment.
So it's a bit of a zero-sum game at the moment. Okay.
I think so.
Great to see you, Philip.
Great to see you. Thank you very much.
Thanks for stopping by to see us, Philip Drury from Citigroup. Plenty more still to come. We'll take you back to what's happening with the markets. We'll get into that GameStop story. We're waiting to see exactly what Keith Gill has to say for himself. Roaring Kitty getting back onto YouTube. What do we expect there? That's next. This is Bloomberg. couple of things I want to flag to you right now, one of which is Gamestop is up and up big, 32%. Obviously, it's a fairly volatile stock. We're waiting to hear what Keith Gill has to say. The other one is that we are watching the French National Assembly. Volodymyr Zelenskiy is currently addressing French parliamentarians. I can show you this online. There you go. That is currently the live picture you are getting from France. Obviously, we are seeing ongoing commemorations around the 80th anniversary of D-Day. That will continue a little bit later on today. Anyway, more to come. We'll be back to the market story in just a moment. We await at 8:30 Eastern the payroll number out of the United States. This is Bloomberg. Friday the 7th, good morning. What do you need to know? European stocks, Wall Street futures steady. We're awaiting the jobs data, 8:30 Eastern. The labour market is softening, but by how much in the United States? ECB officials cautioning against a rush for more cuts a day after the Governing Council delivered the June cut. What comes next, if anything? Plus, President Zelenskiy addresses the French Parliament, or he's doing so right now. This, of course, after a session yesterday that saw Emmanuel Macron promising Ukraine more military support. Good morning, everybody. This is The Pulse. I'm Guy Johnson in London. Live pictures coming out of Paris right now. The Ukrainian President Volodymyr Zelenskiy still addressing the National Assembly in Paris. This all part in some ways of the 80th anniversary of the Allied invasion of France, D-Day. Joe Biden, the President of the United States, making parallels, of course, to the Russian invasion of Ukraine. That story on many people's minds right now. Now, speaking to French television, the French President, Emmanuel Macron, says France will now send fighter jets, Mirage 2000s, to Kyiv and train thousands of soldiers to help the country continue to repel and push back the Russian invasion. Let's take a listen to what he had to say.
We will launch a new cooperation and announce the transfer of Mirage 2005 French fighter jets that will allow Ukraine to protect its soil, its airspace, and as early as tomorrow we will start a pilot training program and transfer of planes.
They're not going to get them for a while, though, which is an interesting question and raises an interesting question about how long this conflict is likely to last for. We're joined now by Bloomberg News Director for EMEA, Rosalind Matheson. Ros, let's talk about that commitment. They're not going to get them for a while. These 2000s are not, these Mirages are not going for a while, and it's going to take a while to train the pilots. Presumably that's, therefore, an expectation by the French that this conflict isn't going to end anytime soon.
Well, certainly it's a signal that they think it may, if they're talking about military equipment and training, which will only bear fruit for Ukraine, at least at the end of the year, if not later. And as you say, it's the older equipment. So really Europe's at the point where they're kind of scraping the barrel with old tanks, old planes. They've sent a lot of equipment there already. They've sent missiles, obviously, also. But they're kind of really, who's replenishing the stocks at the back end for France, for Germany, for countries in Eastern Europe, and how quickly can that be done? They're quite clearly relying on some of their older equipment and sending that in because they don't really have very much else to send to Ukraine. And it takes time to train the pilots, even on these older planes, the Western aircraft, takes time to train them to be comfortable with using some of this equipment. And so that's really at least an acknowledgement, maybe not expectation, but acknowledgement that it's possible the war will still be going at the end of this year. We know that Russia's making a fresh push at the moment. They've been making some inroads, particularly in the east, the northeast of Ukraine. Ukraine's been pushing back heavily on that, but things are not going particularly well on the ground. And so the question is this war just going to run and run for Vladimir Putin? Is he happy for it to keep running and running? Is it to his advantage that it does so? And is there any other way out for this war to come to a conclusion?
We've seen a series of meetings. We saw this morning a bilateral between the US Defense Secretary and the French Defense Minister. What's coming out of these meetings? What came out of the meeting yesterday as well? You got Zelenskiy, you got Biden, you got Macron. They're all meeting, obviously, with the D-Day celebrations, commemorations. What is coming out of these conversations? Do we know?
Well, some of it's just the optics of, let's just make sure that Ukraine doesn't fall off the radar in the public consciousness. I mean, we've got the conflict in the Middle East, we've got the US election, we've got the UK election, we've got a lot of things going on. The war in Ukraine's been happening now for several years, and you can see naturally that, you know, the fight in a way for it to remain front of mind for people, for countries, for policymakers is there. And so the optics of Zelenskiy in Normandy with the US president, talking to US veterans there, to talking with Macron, all of it is about just keeping it really front of mind for the public, because you need the public support for the political support to come for France, Germany, the US and others to continue to push for that financial aid and that military aid to Ukraine. It's
amazing. I've been talking to CEOs over the last few days, US CEOs, talking, and they're making that comparison directly between what is happening, what happened with D-Day. Dave Calhoun at Boeing was making that exact comparison and saying how important it is to remember that. Ross, thank you very much indeed. Bloomberg's Rotherland Masterson joining us. We've just seen the wrapping up of that address by the Ukrainian president to the French National Assembly. We've got a meeting coming up a little bit later on. Biden and Zelensky meeting in Paris today. We think that's around 11:15 UK time, 12:15 Paris time. We've also got this coming against the backdrop, obviously, of European parliamentary elections. That takes place. It started, but it continues over this weekend. This is a vote that will help set policy for years to come, 5 years to be specific. We've seen the Netherlands going yesterday. Ireland and the Czech Republic are voting today. The remainder of the 27 go over the weekend. We think we'll probably get results kind of early Monday, late Sunday night into Monday to get a view of what is happening here. We're joined now to get an update on what is taking place by Stephen Carroll. He joins us from Brussels. Stephen, we've just been talking about the backdrop of the war in Ukraine. How big an impact is that going to have on these elections?
I mean, if you speak to the political parties, it is the central issue in this campaign. They say that support for Ukraine and what the European Union can do to mobilise that support is the key issue facing Europe now. Let's think about what that means, though, in policy terms and for the European economy, because what the European Union actually can do is largely limited to the defence industry, and that's what European leaders have already committed to doing in the right back in March of 2022 in the Versailles Declaration, committing to ramping up joint procurement, increasing investment in the defence industry, building the machinery so that Europe can replace some of that ageing machinery that you were talking about there a moment ago, Guy, as well. This is what European politicians see as the key issue. But if you look at the latest polling from what voters ahead of these elections were interested in, they were interested more in cost of living, inflation, the economy and public health. They were the top issues for voters as well. Remember, this is an election happening in 27 European member states. It's to elect a European Parliament, but quite often national politics gets in the way as well, and the campaigns are fought quite differently in each individual country, and that has a bearing too on what sort of results we'll get when we get them on Sunday evening.
When we start to get those results, Stevens, there is an anticipation that we are going to see maybe broadly a move to the right. How quickly does this start to affect policy? How quickly is this going to feed through into the way that the EU approaches the challenges that come next? And how quickly does that have an impact potentially on how the leaders of Europe address those challenges as well?
It's a very clear signal that we will get from these elections as to how the electorate is feeling about these issues. And that is something that we, from analysts we've been speaking to on Bloomberg today, have been saying means that what you'll see is actually more likely the centre parties starting to drift to the right, to adopt some of those policies to ensure that they're reflecting that part and that interest from voters as well. There's going to be a question of a reshuffle in the European Parliament after this as well. There are parties that are going to move groups. There's a question too of how you'll build a majority to be able to support an EU Commission President. We know Ursula von der Leyen wants a second term at that job as well. Will she be able to build a majority coalition from the current three partners, or will she need to bring in somebody like the European Conservatives and Reformists who are further to the right group? So it'll be interesting to see how that plays out as well. That can happen quite quickly after these elections. We won't have the selection of, or the nomination of a European Commission President, because that comes from the leaders until at least later this month and likely into July. And then you have to get through the European Parliament process. So we are in a period of pause here before we'll see a reflection of that. But you'll be sure that those European leaders will be taking into account how people voted and how they're drawing up the policy strategy for the next 5 years. We could see those policies implemented even if those parties aren't in a governing majority in the European Parliament.
Stephen, great stuff. Thanks for the coverage. That coverage is going to continue over the next couple of days as we work our way towards that result. Stephen Carroll joining us from outside the Commission in Brussels. What are we going to do next? We're going to talk about security, how AI is reshaping cybersecurity. What is it going to mean? How is it going to affect industry? We're going to discuss all of that. The CEO of the identity verification firm Okta is going to be joining us next. Todd McKinnon, this is Bloomberg.
You need to have an AI game plan. In fact, in the SaaS era, which really got started in 2010, a bit before that, we used to say that every company needs to think about becoming a software company or their digital side of their business. Now we say that every company needs to become an intelligent software company. And if you look at the buyers of our companies, all the exits we've had over the last 18 months, many of them are industry buyers that are looking to transform their companies through software.
Orlando Bravo there, talking to Danny Berger at the Super Return Conference in Berlin. He, of course, is the Thoma Bravo founder, talking about the AI game plan that he thinks everybody has to have right now. AI is manifesting itself in a number of different ways, and the security industry is having to kind of deal with all of those different permutations to the impact that AI is having. And security remains one of the kind of key areas that I think a lot of people are focusing on. Security is becoming ever more important. You can see that potentially in some of the announcements that we're anticipating that Apple is going to be making. Bloomberg understands that Apple, remember we've got this big conference coming up Tuesday, will debut a new app next week. It's going to be called Passwords. Sounds fairly straightforward, doesn't it? It's basically aiming to make it easier for customers to log on to websites and software, but do it securely, because we now increasingly understand the impact that AI and various other products are going to be having in terms of that security story. Data breaches have become a growing concern for businesses across the globe, including the identity verification firm Okta. Shares in the company tumbled last October after it was hacked, though they've rallied significantly since then. Just kind of gives you an idea of the challenge and the evolution and the bumpy ride that we're all going through as we work our way through this process. The company's CEO is Todd McKinnon. He's standing next to me. Nice to see you.
Yeah, it's great to be here. Thanks for having me.
A pleasure. Look, AI represents an opportunity and a threat to your business. Kind of how are you thinking about its evolution and how it ultimately changes what you do? You do identity verification. We're hearing all kinds of stories already about how AI is so good at mimicking all of us that identity verification is becoming a harder and harder challenge.
Yeah, I think there's a tendency to think about this from the technology perspective, but we like to start from the customers. And what are the customers struggling with, and what are their opportunities? And we have great customers here in the UK, customers like Virgin Media O2 or Mars.
Yep.
And what they're thinking about is the opportunity. How can they build new products and services? How can they use this new smart wave of technology to better address their customer needs and their markets and fend off their competitors? And identity is at the center of that, because all of those new AI innovations need to be delivered to people. And it has to be easy to access, and it has to be secure. So that's the lens we look at it from. And again, it's an opportunity, but it's also a threat. The threat actors can use AI as well, and that's why it's incumbent upon us as the technology vendor to say, hey, how can we help customers meet this opportunity,
Yep.
but at the same time defending the bad folks? And we're used to that. I mean, there's always threats with every wave of technology.
How is how I interact with companies going to change? How is I, as a vendor or a customer or a supplier, going to change in the way that I interact with these customers? How as a customer, as an individual customer, am I going to change the way that I interact with these companies? Verifying my identity is going to be more and more critical, and ensuring that I am who I say I am is going to be really pivotal.
Yeah, I think that's right. And hopefully the dream of Okta and our customers in the industry is we want it to be easier.
Yep.
This has been too hard. The fact that Apple has to release a password manager, what that means is that we have too many passwords.
Yep.
So we want to eliminate that. We want to move to modern biometric authenticators that can't be phished. We want to make it easier for people to connect with these services. ChatGPT from OpenAI, Okta is the login for ChatGPT. We're helping them provide passwordless login to ChatGPT. So it's all about making it frictionless. And
so how am I going to log it? How is it going to change in the AI world? Because I'm hearing stories of people logging into systems using sophisticated AI that looks like me, that has the biometrics that resemble me. How does the way that this story is going to evolve change?
Well, I think the technology has to continue to advance to meet that threat. It used to be that people would fake your password, and we had to come up with biometric authenticators. And security is an adversarial relationship. So the threat actor is going to try to up the game and try to fake biometric authentication. They're going to try to have deep fake videos to have proof of verification. And we have to keep upping our game to deploy the technology to meet that threat.
So how are you evolving your company to do that? What is happening with it? Are you changing your acquisition strategy? Are you changing your talent acquisition strategy as well? How are you changing the way that you approach what you do?
Well, one of the big changes is we released a capability called Okta AI, which combines all of the data we have from our over 7,000 plus integrations on our platform and our over 19,000 customers, and we're pumping that data into various AI models and capabilities so that we can provide new products, like a new product we just announced called Identity Threat Protection with Okta AI, which uses all that data to detect threats and then protect customers from the emerging threats based on the threats in the past.
But you having to upgrade, are you spending more, basically, I guess is the question that I'm really getting to. What does CapEx look like right now? All I hear about from big technology companies is that their CapEx is going through the roof because of AI. Is that something that is being replicated with you?
It's definitely an investment. For us, most of the investment...
Definitely an investment.
Well, it's mostly we're leveraging some of the great work from the cloud companies and the infrastructure hyperscalers,
right.
and then combining that with the unique data set we have and the unique capabilities in our platform to do something that's pretty efficient in terms of delivering values to the customers.
So where are you investing then? If you're basically using the cloud, harnessing the hyperscalers, as you say, that are investing so much in Nvidia chips and everything else that comes with it, where are you having to invest to make this work? And is CapEx rising as we go through this AI cycle?
It's basically R&D for us.
Right.
It's smart software engineers, smart product designers, making sure those capabilities are mapped directly to what the customers need.
And is the market evolving differently in the United States to over here in Europe? How does the picture...
It is one thing interesting in this wave. In past technology waves, it seemed that the United States was first and maybe the interest in the adoption in Europe trailed. This one seems to be the interest is kind of running in parallel. Everyone is as excited about the AI capabilities, whether I'm talking to a great European firm or a US-based firm.
Do you get the sense that everybody's figured out how to use AI yet?
Well, I think it's been, in the R&D labs, it's been going on for 10 years or more.
Yeah.
But I think the great applications coming out now, like ChatGPT, it's really making people have a concrete example of how valuable this could be. So it's turned the investigation and the experimenting and the deployment into overdrive. And I think within the next 2 to 4 years, you're going to see many more applications that are going to change the world. It's going to be amazing to watch.
Todd, thanks for stopping by. Great to see you. Thanks very much indeed for joining us here in the studio. Todd McKinnon, Chief Executive and Co-founder at Okta. Thank you very much indeed. Coming up, we'll take you back to the market story. We're awaiting the jobs data. That's expected to drop at 8:30 Eastern, 1:30 UK time. That's the big catalyst that we're waiting for. Markets reasonably moribund as we await those numbers. We'll discuss it next. This is Bloomberg.
Are we today moving into a dialing back phase? I wouldn't volunteer that because, as I said, we are making a decision on the basis of the confidence that we have that we are on a path. We know it's going to be a bumpy road, let's face it. The next few months will continue to be bumpy.
Christine Lagarde cutting rates yesterday, but keeping her cards close to her chest as to when the next one is going to come. We've seen a series of ECB speakers this morning certainly indicating that story. The Irish Central Bank governor suggesting that we may see a period where we don't know what's going to happen and maybe we don't even get further cuts coming through. MLive strategist Ven Ram joins us now from Dubai. Ven, what are the chances that the ECB is one and done?
I think those chances are kind of remote. I think that I hear the Irish Central Bank governor, but I think that, he's not the only member on the governing council. And I think there are quite a few doves on the governing council. But I think the message of his message is that, you can't expect back-to-back successive rate cuts. This is not a normal rate cut cycle. So I think that the ECB will go in measured steps here, particularly because they've revised up the inflation forecast. And if you look at the real policy rate for the ECB, It's about 100 basis points. So if it's about 100 basis points, there's not too much of a headroom to cut. And that's, I think, the takeaway message from Makhlouf, rather than thinking that, they're not going to be doing it again. So I do think that it's not one and done, but it's going to be measured cuts.
OK, so maybe we'll get another one maybe towards the back end of this year. Certainly that's what the market is pricing right now. Let's talk about 8:30 Eastern today. We get the payroll number. The survey number is 180. The whisper number is in the kind of mid-160s. We've seen a decent rally in the bond market this week, but with that kind of a setup, is there a danger that bond rally hits a wall when we see that data dropping?
The bond rally is self-limiting, Guy. There's no question about it, because, I expect, if it's 180, 170, it doesn't matter. It's going to point to yet another month of continuous expansion that we have seen for 3 years now. So the jobs market is pretty robust. So unless we get a big shift, a downward shift in the jobs hourly earnings number, and an increase in the jobless number, I wouldn't get too excited about today's payrolls data, because the Fed is going to look at it as an incremental piece of evidence that the economy is kind of cooling, it is losing momentum, however you want to characterize it. But, with 2% inflation still not in sight, and the economy just humming along okay, this is going to take a hard landing for the Fed to be cutting rates, which is why it's hard to see the front-end treasuries rallying too much after the data.
We've obviously seen significant volatility in Indian assets over the last few days as a result of the election. Big dip in equities in particular. The Nifty's now kind of recouped that, so the market's bought the dip. Do you think the market's now got momentum? Indian equities have got momentum here to the upside. Does the buying of the dip continue?
No, I don't expect the buying of the dip to continue, Guy, simply because markets are kind of overbought. If you look at India's market capitalization vis-a-vis its GDP, it's running at some 120%. So the markets are the most frothy in India, outside the United States, anywhere in the world. So the funded investors are invested to the gills on Indian stocks in particular, not so much the bonds. So they are heavily invested in Indian stocks. So what is the proposition to invest the marginal dollar in Indian stocks? At the moment, it's very little. Over the short term, I expect there to be a correction to 67,000 levels on the Sensex. But longer term, if India's economy grows as well as the RBA thinks it is, they revised up the growth forecast earlier this morning. And if it continues a pace to grow at 7%, in 5 years' time, the Sensex and India stocks will be doing very well.
Ven, have a great weekend. Thank you very much indeed. MLive's Ven Ram, thank you very much. So we've got a Biden-Zelenskiy meeting coming up at 11:15. This is UK time. We've got, obviously, the big payroll number coming up as well. Steve Wozniak is going to be joining us Monday. Obviously, it's the Worldwide Developers Conference at the beginning of next week for Apple. That's going to be the big story next week. This is Bloomberg. The Brief is next.